Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so 32 experts were asked about what they believed about the housing market right now. And now these are actual experts. These were not like Joe's, opinion because he has a YouTube blog, right? These are experts. So Fannie Mae Chief Economist, people like that. Chief Economist at Zillow, Redfin, people that actually understand what's going on. And so the question was, are we in a bubble? Right? So and if you ask most people, what do most people say?
Well, most people would say that we are in a real estate bubble. And the number one reason that they cite for this is the rapid price appreciation over the last few years. We've talked about this a lot on the blog, and our opinion is that rapid price appreciation alone does not make for a real estate bubble. But let's see what the experts had to say. Okay,
so the first quote from the article is that we got this information from. Nothing has been typical or predictable about the U.S.'s housing market in the past 2 years. So this is actually extremely insightful. And for those of you who watch this, you kind of understand that we have a broad economics background and we're not just like your typical real estate agent, right? So, but what's interesting about this is the fact that what this is saying is that the model people use, it doesn't work anymore. Like that valuation model is broken, and because it was based on factors that are not the same, and they don't exist in the same way that they do now.
Right. So people are very accustomed to taking past experiences, of course, and predicting the future based on past experiences, which is a natural thing to do. That's how humans function. However, the past experiences that we've had with the real estate market do not fit the current market conditions. And what I mean by that is our past experience with real estate crashes, particularly the most recent one, had to do with certain economic factors, primarily what was going on in the lending industry and the speculation, that sort of thing, that accompanied rapid price growth. That's not what's happening this time. This time we do have rapid price growth, but that financing piece that was actually what caused the market crash in real estate previously is not present this time around.
Okay, so I'm going to put up the chart. This is the one you've all been waiting for. Now, before I put it up, we've got a ton of quotes from people. They don't all support our position. Some of them are what we believe. Some of them are opposite, but we want to show you all these. So I'll start with this first one here. 32 experts on whether the U.S. is experiencing a real estate bubble. 69% said no, 19% said yes, and 12% said maybe. So not even 1 in 5 said yes, experts, okay? Most by far, 70% said no, and then some said maybe. What are your thoughts on those numbers?
I think that they reflect the overall attitude of homeowners out there in the U.S. at the moment. I think that to a large extent, people still believe that there will continue to be price appreciation in real estate going forward. I think some believe that there is a real estate crash on the horizon, but I think most people don't believe that, because if people believe that, then they would obviously all put all their real estate holdings on the market and unload them as quickly as possible so they can take their money before the market goes boom.
Right. So here's the first quote. This is a quote from somebody who's on a bubble side, right? The prices are going to go down. Dean Baker, senior economist at the Center for Economic Policy and Research, says he thinks higher interest rates will be a factor. So he thinks interest rates are going to cause a problem. It wouldn't surprise him if we do see prices decline nationwide, but it won't be anything like what we saw in 2007 to 2009. So predicting not a crash, but a decline.
Right. So to be fair, a decline is definitely something that's very possible, and a decline is something that happens periodically, particularly as we go into the fall. This is something that happens every year. The market slows down. Some areas that are not as strong tend to decline a little bit. Other areas are not as much affected.
Here's another quote from Dean. I don't expect any sort of plunge or anything, but I think the higher rates will definitely put a big damper on house prices, and it could lead to some decline. So that's the actual.
Right. Yeah, so it's the same thing that I said before. But, we do expect prices to fluctuate. That's the nature of any free market.
So here's somebody, this is the Deputy Chief Economist at Freddie Mac. says house prices are still going up at a very robust rate, although the rate of growth may be moderating.
Right. Again, part of it is cyclical as far as the time of year, and part of it is the interest rates. Part of it is also the economic uncertainty, because we do all hear on the news about all sorts of economic factors that give us pause or concern, and all of that plays into people's decisions as to whether or not to purchase a home or not. However, we are not seeing sellers in mass sell their properties. We are seeing some fear of missing out on the part of sellers, so there are sellers who are putting their houses on the market sooner rather than later.
Yep.
And that's fine, and it's contributing to the increase in inventory, but sellers are not going out and saying, hey, whatever real estate I have, I'm going to put it on the market now and take all my money and run.
Nope, nobody's doing that. Chief Economist at the National Association of Home Builders doesn't think we're in a housing bubble. He says he thinks there's a growing number of local housing markets that are exhibiting frothy conditions right now.
Right.
So you have two things. You have what's going on nationally, and you have specific markets.
Right. So, so there are lots of markets where you maybe have a whole bunch of builders in there that are maybe experiencing some a higher number maybe of cancellations due to interest rates rising, because remember, these people put their houses under contract some time ago. Now these homes are nearing completion, and because of the rise in interest rates, maybe those buyers no longer qualify for the loan. So that is something that's a real thing.
Right.
But those homes that these buyers can no longer purchase will be absorbed. The question is, how long does it take to absorb those homes? We're not seeing price reductions in the new home market, so that leads me to believe that the absorption rate is something that the builders are willing to go with at this point.
And if prices of new homes started dropping, builders would stop building.
Right.
Because remember, it costs them a lot to build a house. They're not going to build them at a loss. They'll just stop building and hang out and wait for prices to go back up, or wait for the cost of building to go back down. So that's kind of a nice cushion to the market. Didn't happen last time because it was speculation. There's no speculation right now.
Right. So the other thing is, remember, builders don't have a whole lot of margin right now because they put these houses under contract some time ago. The price of materials and labor has grown, particularly with inflation and that sort of thing, and the scarcity of materials and scarcity of labor. So they really don't have that much of a margin. So if they were feeling less than certain that they could turn these houses that are being canceled fairly quickly, then we would see more incentives. There wouldn't necessarily be a price drop in the house, because builders don't like to do that. But what they would do is they would say, hey, we'll go ahead and still sell you the house for this price, but we'll throw in upgrades or whatever spiffs that they can make that happen for the buyer to incentivize the buyer to purchase the home.
All right, Jennifer Beeston, who is the Senior Vice President of Mortgage Lending at Guaranteed Rate Mortgage. If all of a sudden we had a great amount of supply and people were no longer interested, then we could argue it was a bubble. That was 2005 and 6, but we still have a very low supply and we still have quite a demand. So think about this, Wanda. If no one looked at prices of real estate, if you only looked at the underlying factors, there would be zero people who said we're in a housing bubble.
Right.
The only thing people are saying is, oh, the prices are up. The prices shouldn't be that high, and last time prices went up, they fell, and it's going to happen again.
Right. So I think people are concerned about the rapid appreciation, and people are concerned about the rising interest rates. I think that the thing that people really need to also look at is inflation. So with inflation being a huge concern for people, I think people are looking at the economic certainty of owning a home and having those fixed mortgage payments as opposed to escalating rent prices. So that is something that is probably still keeping a lot of buyers in the housing market as far as trying to purchase a home, as opposed to sitting this out because of the rapid appreciation.
Ivy Zellman, the CEO of Zellman and Associates, I don't expect that we're going to see a crash, but do expect pricing pressure given the combination of stretched affordability and future supply. This is kind of what we've been talking about.
Right. Yeah. So, I mean, look, not everybody can afford a home, and we understand that, and we're not suggesting that everybody can, but what we are suggesting is that homes are still more affordable, particularly for the long term, than renting.
Okay. Nick Nuveen, Chief Investment Strategist at Nuveen Inc., his own company, I guess, says he doesn't think there's a bubble. He thinks there's a shortage. It's the opposite. And he says the reason behind prices are so high is because there's been 2 years of incredibly high demand. Obviously, supply and demand is what creates price. Price is just a thing that measures the combination of supply and demand, right?
Right, and the shortage is something that we've talked about for a long time. It's certainly been documented by other much more reputable establishments than us, such as the U.S. Census Bureau, such as HUD and Fannie Mae, Freddie Mac. All sorts of other organizations have documented the overall shortage in the housing market in the U.S.
Another quote from Nick, supply is not going to catch up to demand anytime soon. So this is for future looking. It's not going to catch up anytime soon. We had the 2018, then 2019, then 2020, then 21, now 2022. Every year, market crash, market crash, market crash, market crash. He's saying not anytime soon.
No.
So I guess they'll just say it every year until it crashes,
right,
or until it declines 1%, and then they'll say, then they'll go around and tell people, I called that market crash. Every year I called it, and it went down 1%, market crash.
Right. So, as far as supply catching up with demand, we're probably somewhere around maybe 4 or 5 years from now. Then we'll maybe reach a better equilibrium, but it's going to take some time.
Here's one of the people that believe we're in a bubble, Desmond Lackman, senior fellow at the American Enterprise Institute. The housing market is in a bubble, but it's not as bad as a bubble as we had in 2006.
True story. True story.
Right.
I mean, look, the housing bubble has existed and it will continue to persist from the perspective of the rapid rise of real estate values. But it takes more than that to make a true bubble. Okay, so price appreciation is insufficient. It takes a lot of other factors.
I think something that's very interesting is that people who are predicting a market crash, and we've said this many times, we're not saying that prices won't decline. We're not saying they won't stay the same. We're not saying they will go up. We're not saying any of that. We're just saying there's nothing that shows the market's going to crash other than prices have gone up. The prices have gone up on everything. So I guess gas prices are going to crash, like to zero or to $1 for gas, right? Because gas prices are going up, and if you just look at the price, you go, that's going to crash. People are speculating in gasoline. That's why prices are on up in gas, right? It makes no sense. But here's the thing. If these people were so smart and could predict the real estate market that accurately, where were they 2 years ago? And did they predict this 2-year run-up that we've had? Like, can you find their video that they made in 2020 and said, the market is going to go up 50% in the next, or 35% or whatever in the next 2 years? Or were they saying it was going to crash? And if they said it was going to crash to the opposite, like how completely wrong they were. Right? So
everybody's got an opinion, but I think the overall opinion of all these experts has been that for the time being, the market is on pretty solid footing. It's unlikely to crash anytime soon, particularly considering the inventory shortage. Yes, the rapid appreciation is a concern. Yes, the rising interest rates are a concern, but they are insufficient to substantially hurt the current real estate market.
Yeah, and forget price. Price is just the result of supply and demand. And we know, looking back now on 2006, because you have perfect vision in hindsight. You can see everything and it all makes sense. In 2005, and we did a video where we just talked about this. In 2005 was the highest time ever in history that people said it was the best time to buy a house. Now think about this. You're looking back through your rear view mirror. 2005 was the best time ever. And guess what? One of the 4 worst years ever to buy a house. 9, 10, 11, and 12. The bottom of the market. So here's the bottom line is people don't really know. Okay? Nobody really knows. But we do know this, that when you have no homes on the market, or homes are disappearing in a week or two, and remember, a normal market is anywhere from 3 months to 6 months, right? It's normal market to have your house be on the market for 6 months. When you have that, something's going on. There's some imbalance there, and we all know what it is. We know it's because home builders for about 13 or 14 years in a row have underbuilt. We have built under the normal amount of homes. We have a shortage of homes. So the supply curve has shifted and has caused the prices to go up. That's literal, demand and supply have sort of acted against each other to push prices up.
Right. So this is our take on the real estate market. If you have data that you'd like to share with us, please go ahead and put that in the comments. We'd love to take a look at your data. I have gotten emails from other people letting us know what their data is, and we've traded information back and forth, and I always find that very interesting. We do like listening to other points of view, and if you support our point of view, thank you very much. If you don't, that's fine too. We want to hear from everybody. And please subscribe, hit the notification bell, like the video, share the video, and we'll see you on the next video. Bye.
Bye.